Hello everyone. I hope you've had a fantastic week. It's Friday. If you enjoy Fridays, then TGIF. If not, then I'm sorry, but I have an attitude adjustment, I guess. Let's get into this trade analysis. This is the Euro Pound 4-hour chart. You can see the channel structure that we've just been bouncing between. And like the week of the 12th, the 11th, whatever you want to call it, looks like maybe the 10th, actually, depending on the way I have this rectangle drawn. Anyways, made some new lows, and you can see every time we make new lows, just the impulsive bullish presence that emerges. You know, new low, impulse, new low, impulse, new low, new low, new low. You know, every time we make new lows, we just get this impulsive move and head back up in the direction of towards the top of the channel. Depending on how you draw that, you know, if you want to slice through some price action, you know, we kind of got this ugly, you know, mid, you know, you can see just, you know, it's kind of respected, but it's chopped through as well. So not something that I had drawn or really played a factor in this trade at all, but you know, this structure did. You know, once we made that low, you can see we kind of consolidated before impulsively we busted out of that with this huge bullish candle. Additionally, you know, from the low we made, I chose a couple different anchor points as my trend line start. Used the same establishment point for that trend line, and you can see kind of the zone that was between those two trend lines right there was kind of between that 87.50 and that 87.20 level. So I knew that was kind of where I wanted to try and plan a trade if other things started coming together. So, you know, doing my analysis, this is exactly how I do it. You know, I start with some kind of just market structure. What are we doing? Are we trending? Are we ranging? Are we in, you know, consolidation, which is kind of ranging? But, you know, what are we doing on the higher time frames versus what are we doing on the lower time frames? Are we, you know, because just because we're in this channel structure and doesn't really have any clear trend direction, you can see the micro trends within this channel structure. You know, currently on the 4-hour chart, we're in an uptrend on, if you map out that market structure, you know, we got a low, high, higher low, higher high, higher low, potentially higher high coming up. So that's how you kind of map the market within the higher structure, market structure, if that makes sense. Even though we don't really seem to be trending within this structure, you know, we are trending within this structure. So it's you know, hope that makes sense. So currently just riding this, you know, micro bullish trend here that we have going on here on the Euro Pound. Fib wise, where did I plan my fibs or draw them? You know, so just from that low to the high that we've made most recently, you can see nice 50% retracement. You know, additionally, if you bring in, let's see here, you know, this impulsive move from our kind of our higher low point, we have a couple of nice fib levels between. So we got the 61.8 and this 50, so 50% from the true low to the high. You know, most recent impulsive move, we have that 61.8 and 78.6. You know, so that's kind of my big zone for fibs. You know, you got that more narrowed down confluence level coming in with the, if you kind of identify just a particular level in support and resistance, you can see, you know, this level here around that 87.30 or 87.40 to 20 level, however you want to call it, really seems to be holding nicely, with, you know, the exception of the occasional random spike for whatever reason. But you can see that, the support, resistant, or support, resistance, it's holding on both sides when the market uses it as a jumping off point for both buying and selling. You can tell that just by the the impulsivity coming off of it in either direction. So I call technically kind of like to call that like a role reversal level. You can visualize the buying interest and on the other side the selling interest from that zone or that level. So that all kind of came together right in around here. Lower time frames, like the market ebbs and flows. So in this 1 hour downtrend, once we created this wedge structure here, broke out of that, if we take the high of that to our bottom that we made initially, you can see we get a nice little 50% retracement there, which also kind of established this channel structure for the 1 hour that we were starting to form. Pop down to the negative 23.6, consolidate a little bit, and then pop down a little bit more to the negative 61.8, which was all kind of coming together in my little confluence area. Nice little pop out of there initially. You can see my entry and my stop. The reason why I was, I always get questions about why I put my stop where. Well, why didn't you put it behind the structure here? Yeah, that would have been a safer bet, but the reason why I'm getting in this trade is this little tiny box here. You can just see the level of confluence that I have. I got intersecting trend lines from higher time frames. I got intersecting trend lines from lower time frames. I got a couple different Fibonacci's. I got profit targets. I got structure levels that I had, support and resistance levels that I had mapped out. So all that is the reason why I'm entering this trade. So I'm expecting this area to have some kind of bullish emergence, right? If I wasn't expecting that, then yeah, maybe I should put my stop way down here or even below the very low. But that's too big of a zone for me. I'm expecting this zone to hold. So if this breaks, then I need to get out of this trade and reevaluate, because my level of confluence, didn't have the strength that I expected it to. So who's to say this thing's not going to just tank down to the 78.6, which would stop me out for more. So it's all personal preference, and yeah. So if that hopefully that makes sense for you. That's my confluence. That's where I'm expecting the market to stop, turn around. So that's why I entered. Stop doesn't need to be very large with that. No, there was quite a bit of distance between this area and my stop. It was behind another fib level by a few pips. I think I may have actually had it just below the 8,700, so maybe like 8,900 or 86.98. So right about 30 pips or so, I think is what I had it. But currently between, I don't know, 80 and 90 pips, depending on where the market is at the time. Looks like maybe 84 pips, something like that. So target, we're kind of forming a new little channel structure here, depending on how you draw it. So I don't really have targets in mind, other than maybe the top of this channel, depending on how you draw it. Let's bump back out to the 4 hour. You can see the top of it. We've yet to, retest that. What's kind of, depending on how you draw it. Looking for that third touch potentially, over the next couple weeks, if it turns into that. I'm risk-free at the time on this. I don't particularly want this to come back down to my entry, because if it does, both of these trend lines will likely have been broken, this one especially. And obviously if it just tanks right now, it may hold, but I wouldn't want to be in that at the time. So I'm risk free on this. We're just going to play it by ear and trail as you know, if we can push up above this, you know, these most recent highs that we have around 88.50 area, you know, then I'll probably trail my stop up. So currently break even, you know, if we push up above these highs, get you know, like a nice daily close or something above that. Weekly close, I guess, is what it would be. Or, well, I don't know if we're going to have enough momentum to push it up and close on the at new highs this week since it's Friday. But you know, definitely if we, you know, going into next week, if we get some more bullish momentum out of this, out of these levels, then I'll definitely look to trail that stop loss. Likely up underneath this structure, wherever the market bottoms out. If it bottoms out, you know, if it comes back and stops me out, that's trading. It's risk-free at the moment. So that's kind of what I see on this. I hope it helped. Like my video if you want. Subscribe if you're not already. And share with others if you found it useful and think it can help somebody else. Go check me out on Instagram. If you Google or if you go to Instagram and search Danny Sanborn, then you can find me there. So take care, everyone. I hope you have a fantastic weekend.